Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Topic and ADM Investor Services International Limited. And here comes the final important bit.
Thank you, Mark, and a big hello from London. After the busy last few weeks with technical patterns coming out of our ears, last week itself was a quiet time. There were only 4 weekly key reversals seen in all the markets that I cover. So let's go through them. After all, it should not take that long. In currencies, we had a weekly key reversal down in Aussie dollar against the US dollar. This came at the peak of the recent market after a rally that stretched from late October. However, so far, there has only been indecision this week, with the market neither really higher nor lower, and instead rotating around the long moving average, currently at 65.74. We also had a weekly key reversal up in US dollar Indian rupee last week. Here also, we have not seen a follow-on higher, and the market has remained within last week's range. However, there are signs of some nascent bullish movement, with yesterday's close being the 3rd highest ever, only surpassed by the 2 seen in last week's action, which was obviously part of a weekly key reversal up. I suspect the market is looking to currently test higher, though it is afraid of what lies beyond 83.45 and the 83.50 levels above. I cover this currency pair more fully in my daily foreign exchange commentaries. There were no weekly key reversals in the stock indexes, stock index futures, fixed income, and fixed income futures in the markets I follow. So it's over to the commodities. And we saw a weekly key reversal down in spot silver last week, countering nicely a prior weekly key reversal up from 4 weeks ago, and with some pleasing follow-on lower action this week. It was also worth pointing out that though spot gold did not have a weekly key reversal down last week, it did nevertheless construct a lesser outside week pattern during last week. Finally, we had a weekly key reversal up in New York cotton futures last week, as the market rose up and tested both the almost flatlining long moving average overhead, currently at 83.18, and the declining short medium moving average, currently 83.17. However, in both cases, prices failed to effectively punch through or close over either of them. Indeed, we now have a bearish looking a dead cross of the short medium moving average down through the long moving average being made today. Although it is still worth noting this is a lagging indicator. Nevertheless, the market has pulled back down this week from not only any follow-throughs higher, but also away lower from Friday's close. As always, I'm happy to answer any direct questions with anyone who's interested. And with that, I'll finish this section from London. I hope that you found these comments useful.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Topic and ADM Investor Services International Limited. And here comes the final important bit.